Hey guys, it's Francesco here, and in this video, we're going to debunk the 3 myths to investing in the stock market. I promise you, if you stay till the end of this video, I'll change your perspective on what investing in the stock market actually entails. So the first myth that I always hear is that investing is gambling, and that's really not the case. When someone says investing is gambling, you just have to go back to the fundamentals. What is investing in, say, the stock market or a stock? A stock would represent fractional ownership in a real operating business. So investing is not gambling. Investing is investing in a business that's functioning each and every day that you think will do well in the future. Too often, many people use these stocks as trading vehicles, and they actually forget what a stock represents. It represents ownership in a company. So people who use these stocks for short-term trading, they have a trading strategy, and that's a different approach than actually investing in the real business. They have a lot more risk, and they're more prone to losing money. And basically, their strategy is that they lose less money than they make. And ultimately, that's when people get deceived on thinking that investing is gambling. But it's really not, especially when you're investing for the long term of that specific company. So investing is totally different from gambling, and you should definitely not get the two things confused. So let's put it this way. If you had 200 bucks, would you go walk up to that blackjack table and either double your money or lose it all? Or would you rather take that $200 and invest it directly in the casino's operations, knowing that the statistical data is in their favor and they have a strategy to benefit from all of these people that are gambling for the long term? And ultimately, when the deck is flipped in the casino's favor, you're going to be sitting at the bar complaining on how the casino just took all your money. So this story paints you the picture on how gambling and investing are two totally different things, and the person who gambles each and every night will have a much harder time sleeping than the person who actually invests in the casino's operations. And ultimately, the person who invests in the casino's operations will do better long term. So I hope this gives you a sense of confidence that investing is not the same as gambling, and it shouldn't prevent you from getting started. So the second myth is that the stock market is only for an exclusive group of brokers and rich people. Many advisors claim to be able to call the markets on every turn. However, almost every study done on this topic has proven those claims are false. Most market forecasters are notoriously inaccurate. Also, the internet has made the market much more accessible to the public than ever before. The data and research tools previously available only to brokerages are now available to individuals like you and me. Moreover, discount brokerages and robo-advisors allow investors to access the market with minimal investment. It's easy and straightforward. Just make sure to have an investing strategy. So ultimately, the market is not for the elite group of people or certain people, but anyone could actually get started with investing their own money in the markets. So you don't have to be an absolute expert to start investing. And actually, you don't have to go to Harvard Business School to start investing also, even though they make it seem like you do. But you just need to have a simple yet effective strategy when investing your own money. And now it's more accessible than ever before with all of these apps and brokerage accounts that are available. We could just do it right from our smartphone with a click of a button and make those investments ourselves rather than seeking out an expert that is wrong a majority of the time and makes it seem like you need them more than they need you, and that's really not the case. So to debunk myth number 2 is you don't need to be an expert, or you don't need to be rich, or you don't need to be part of some elite group to start investing in the stock market, but you just need to have certain fundamental understanding of the market, and you'll be able to invest your money for yourself for the duration of the time that you're investing. So myth number 3 is that stock market investing takes way too much time. But that's not the case. You don't have to be looking at the market each and every second that it moves. Also, people who have more of a passive investing strategy, it takes little to no time, And if they're actually investing in a company and doing a bit of research and have a strategy, they're not looking for the short-term moves. Most of the time you could actually preset those purchases that you're going to make in your brokerage account. So you could specify the amount of shares or quantity you want of a certain investment. And also you could specify the price that you're willing to pay for that investment. So you don't really have to be looking at the market all the time. You just have to have an idea and a price in mind that you're willing to pay for that specific security. And you could set up something called a limit order. So a limit order will only fill if the security you want to purchase reaches that specific price that you specify in that order. Let's put it this way. Even if you invest with a financial advisor, you still need to sit down with them multiple times per year, and they have to consult you on the best way to invest your money. And basically you have to reach out to them every single time you want to make a change or you want to invest in a new type of asset or a new type of investment product. You could invest from the comfort of your own home on your own time, and all you'll have to do is log into your brokerage account and purchase those specific stocks or specific ETFs that you want for your investments. Especially if you use a robo-advisor or have a low-cost investment strategy, such as buying index ETFs, that'll maybe take you 1 to 2 hours per year to start investing your own money. And it won't actually take too long. You'll just have to go through the motions and basically do the exact same thing each month or each quarter when you decide to invest that money. So don't get me wrong, depending on your strategy, investing on your own might take a lot of time, but there's different strategies that don't take too much time. And especially if you have a busy schedule, you want something very easy that you'll be able to maintain and keep up with your investment strategy. So it might take a lot of time once you start to learn and once you do get set up, but once you're set up and established, you'll be able to automate that process and make it very easy for yourself to maintain that investment strategy. And there you have it. These are the 3 most common myths I hear about investing. So don't let these myths prevent you from getting started with investing. And as I always say, getting started with investing is the hardest part, but once you start and you gain confidence, you'll be more comfortable with investing and ultimately you'll save time. It's not gambling, and also you don't have to be a professional to start investing your own money. Thanks for watching this video to the end, and make sure to like and subscribe, and also leave down in the comments section any future topics you want me to cover, or just if you have any general questions on investing or any of the things I talked about today. Always remember, guys, invest in what you believe in what you understand. Thanks again for watching.